Hello, everybody. Welcome back to CNF Talks. Today I have with me Sean Kidney, the CEO of Climate Bonds Initiative. Sean's going to be speaking at the Making the UK a Global Hub for Transition Finance Summit, which is being held in London on the 10th of October. So, Sean, welcome.
Hi, Maurice. Thanks for having me on.
Great to have you with us. Perhaps we could start by asking you to tell us a little bit more about the Climate Bonds Initiative for those people not familiar with it and its successes to date.
Well, we're the global NGO for green bonds and various architectural apparatus which has come off that. Noticeably, guidance around qualifiers as green and transition, pertinent to our question today. So we've been doing what's called taxonomies of sustainable finance, first the climate bonds and then for the Chinese Central Bank and then for the European Commission and a whole lot of other countries around the world and the UK too, which is making it easier for investors, issuers and governments to know what qualifies as green, what qualifies as transition going forward. And then growing the market. The success, I suppose, is that this market has grown from $1 billion outstanding to $5 trillion US outstanding over the last 15 years. So it's been pretty large, 100-fold increase in the last 10 years and continues to grow. The green and transition bond segment will hit about $1 trillion issuance per annum this year, which is a growth of about 30% from last year. So it's working. Is it working enough? No. But is it a great step forward? Yes. And there lies a few questions, I guess.
Yeah, I mean that sounds like tremendous growth. Could you tell us a little bit about, in broad terms, what the criteria are for ensuring that a bond meets the green bond standards, the climate bond standards that you have, and how do these criteria ensure that the bonds contribute effectively to climate goals?
So, Maurice, it's simple, really. You know, if you borrow from your aunt to buy a car, and your aunt says to you, I really think it should be an electric car. It's better for the planet. And you say, yes, of course, an electric car. And I will come by every year and take you for a drive at Christmas in the electric car to show you how cool it is. That's a green bond. It's as simple as that. Now, there are some protocols, legal documentation that goes with that, so on, getting independent review to make sure the car really is electric. Those sorts of things have become normal in the market, which protect against greenwashing. There are some misconceptions. You know, there is a discussion about people in the carbon markets about additionality, so it should only be new, right? You know what? If a solar farm or electric car is 2 years old, it's still green. So if you buy and sell a second-hand electric car, I'm going to say, frankly, that's pretty good too. That's no less good than buying a new electric car. In some ways, might be better because of resource. So the bond market is very similar. A large chunk of the bond market, the majority of it really, is refinancing of existing green assets. And there's some new. Now that's really important because when you understand what bonds are about, bonds are primarily about refinancing things that are built. And by making it easier to refinance, which essentially is owned by pension funds and insurance funds, who don't invest in projects, they invest in existing assets which are safe and secure because they've got to pay your pension fund in a few years' time, Maurice, when you retire in 2046. And they've got to have safe, secure assets. They need them built and operating. You suck in that kind of work. So the more bonds there are, the more project finance or bank lending or equity happens to create new stuff. It's a bit like a huge wave moving through the ocean. The bulk of the wave is bonds. The froth, the front, is equity and bank project finance. That's what we're doing. We're creating the big bulk of the ocean that's driving the wave.
Interesting. I mean, in terms of the coupons that they pay and how effective it is from a financing point of view, one reads about the greenium, as they put it, in terms of the premium. To what extent do the coupons diverge from non-green bonds, and is that gap narrowing?
Look, if you're an issuer, maybe you're a utility or the UK government, the most important thing for you is getting more investors to be able to place more debt easily and quickly, and loyalty and stickiness. if you could phone up an investor and say, will you place $1 billion as distinct from having to spend 5 months on a roadshow, that is worth it. That's gold dust. That's what green bonds give you. So it's the nature of the investor relationships as exemplified by the level of demand. When the French government issued its latest green bond in January of the year, they were 14 times oversubscribed. That means they got 14 times as many buyers as bonds they were placing. That is way higher than an ordinary French government bond. And this is normal throughout the industry. So that's the first point to note. So if you're trying to place money, this is like fast track. There are some pricing benefits that happen. If you're getting it 14 times oversubscription, you could probably eke out a few basis points, and certainly you do. There is a kind of cliff, because when you've got to make an argument that this is, take it to credit committee, this is a different kind of bond. Let's just say the appetite for price difference is narrow, but useful. When the UK government issued its first green bond, it saved £28 million by issuing a green one versus a vanilla. Yeah, that's useful. But why does that happen? It doesn't happen because everyone thinks, I want to save the planet, I'll tell it less money. It happens because in secondary markets, these are seen as more value. Basically, people think that the bond that's got the bonus feature, that is, it helps save the planet, is worth more than the one that isn't, or is worth hanging on to. There's more reporting, more storytelling that goes with it. And so therefore, it has better value. Whenever there's a downturn in the market, green bonds hold their value. Now, if you're a pension fund and you're worried about paying your pension in 2046, you've got to make sure that you maximize the value of your portfolio on that date. A bond that holds its value and doesn't crash every time there's a market crash is gold dust. And that is driving what you call the greenium. And that's a global phenomenon.
Fantastic. Finally, how well positioned do you think London is as a global hub for transition finance and supported, as you say, by this tremendous bond issuance? Is London in a good position for this?
So the whole transition idea is about becoming greener rather than being green. And it's about companies in particular and governments that are mapping out how to transition to the kind of world we need to. There's guidance, there's a whole lot of guidance we're doing, other parties based in London are doing. London is actually the centre in terms of organisations that are thinking about what involves critical transition. London has a couple of things going for it. First is, it is still the world global financial capital for international finance, remains so, despite the growth of other markets. It's still number one, and London is working with other markets in collaborative ventures. Two, it is the centre of intellectual thinking about what to do on climate and transition. This is the place where the standards are being developed. Put those things together, we can really make something out of London. And what we propose to the government and the report that's coming out is that London have a focus on credible guidance, on supporting the existing work that is already world leading and being adopted around the world. That's transition pathways, science-based targets issues, ourselves and our World Benchmarking Alliance and Grantham, LSE, etc. One. And two is link that to preferential programs, everyone from capacity building by the Foreign Office programs around them, which they are doing to a certain degree. They just haven't necessarily made it all consistent with the rule sets and credibility yet. There's a bit of work to be done there. With the support for financial transactions in the City of London, and there's a bunch of ways we can support that, from professional education work to incentives in some sectors, preferential rules, and so on. I absolutely think that London can be the global centre of transitional finance, which is going to become huge over the next 10 years. Let's just say must become huge over the next 10 years.
Yeah, I fully agree. On that note, for our viewers, if you want to hear more about this and related issues, please do attend the Making the UK a Global Hub for Transition Finance Summit in London on the 10th of October. Further information available on our website, www.cityandfinancial.com. Sean, thank you so much for sharing those thoughts with us.
Thank you, Maurice. Thanks, and thanks for what you're doing.